Are you one of those who compare prices before deciding to book a Grab or a cab? Because I find myself doing the same whenever I need a car ride to get around. With news of Grab saying they'll buy over Transcab late last week, we may see changes in how we get around from place to place. Whether it's lower prices or getting a ride more easily, we still don't know how this buy over will pan out. Well, if anything, hopefully it will be a win-win for both the drivers and commuters. Now, let's get to the point with senior transport correspondent Christopher Tan for his perspectives. Chris, first off, what does this buy over mean for you and me as consumers?
I think the chances of prices going up is higher than prices coming down because, there is less competition now, right? With Transcab subsuming to Grab or going to be, there'll be one less competitor around. And the profile of Transcab fleet and drivers, as we know, they are older drivers. They tend to be older drivers, older cars. Rentals can be kept lower, and fares also they cater to more street hail. And street hail, we know, are the lowest strata of point-to-point fares. The thing is, with them subsumed, I'm not sure in the future going forward there'll be as many available street hail cabs. Grab says that they are going to have a system where their app allows them to cater, or for the drivers to cater to street hail rides as well. But I think time will tell. Time will tell. Well, but one thing for sure is that we will have one less competitor, and when you have less competition, prices are more likely to go up than down.
Let's talk about the taxi sector now. What does this move mean for the shrinking influence of taxi companies? Or is it too soon to write off the relevance of taxi companies in this space?
Well, over the last 10 years since ride-hailing players came onto the market, we've seen the taxi industry shrink by quite a bit. The taxi fleet has more or less halved in size over the last 10 years. But they are not going away altogether, not anytime soon. You have ComfortDelGro, which is still a dominant player in the market. They have a fleet size of about 9,005, including their private hire cars. They are still a force to be reckoned with. Now, whether ComfortDelGro is able to sustain for the longer term depends on how well they can get their app up to speed. I mean, the experience is that, the feedback we get is that their app is still a little, not as intuitive or not as responsive as Grab's app. And, on that note, Grab has up to 75% of the ride-hailing market, also quite a dominant force.
Chris, should we, as in those who don't have their own cars, be worried that this buy over may strengthen Grab's hold on the private hire car sector and, perhaps even have a monopoly of it?
Well, for sure, they will definitely have a stronger hold there. But that part of the equation is a little different. We are talking about people who want to have access to a car for a day or maybe for a couple of days or maybe even shorter, a few hours. That market is, it's segmented. There are people like Lumens, Lion City Rentals, which is running a huge fleet as well. Now, whether that part of it is going to be better or worse after Grab's acquisition of Transcab, really, I think it really depends on how these players are regulated going forward. Right now, there's very little regulation on their part because they are allowed to bid for COEs, competing with the retail consumer. And being corporations, they have a lot of funding from either overseas investors or local investors, and they are able to very often outbid the retail consumer. That means the individual car buyer. What could change if regulators come in and say that, we have a sudden change of policy or guidelines or regulations regarding corporates who bid for COE. These players have an interest, of course. They try and keep the prices up. to keep a level of bias, a segment of society, make them less able to attain a car, and therefore demand for rental goes up.